The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the April 6th magical Monday edition of today's opening bell on the Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. I hope that each of you had a magical, fabulous weekend out there. It's great to be back with you. Let's make sure that you and I, that we do everything we can to get the most out of our magnificent and magical Monday. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right, a little 2x4 exchange out there. It means that you and I, we can find the gift in every set of circumstance that life is going to throw at us. And that's what life is supposed to do. Just like these markets, they're supposed to throw information for the bulls and the bears out there. And that's why we like to go on treasure hunts. Now, the most important thing for you to know is that I am grateful for your presence here today. I'm here to serve you, so feel free to give me a call at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. This is Marvelous Monday, none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we have Dow Futures trading off about 120 points, trading out at 17,556. S&P Futures up 12.5, trading at 2,047. NASDAQ Futures off 26 at 42.81. That's what it's trading at. Russell 2000 down about 10 points at 12.41. The king of dollars, down 136 ticks, trading at 96.66. We've got movement in the currencies. Goldilocks, how about the hard currency out here? Gold is up 20 bucks. She's trading at 12.21. Silver up 46 cents. That's 2 8/10% to the upside, trading out at 17.16. Light sweet crude up a little over $1 right now, trading at $50.29. Now, it is Magical Monday. Of course, we are limited on some of the data that we can look at to get a feel for what's going on with the markets. What do I mean by that? Well, if we take a look at 4 of the 5 markets that you and I look at for information, such as the DAX and the FTSE, hey, they've got it right out there. They've got Good Friday off and what they call Easter Monday. So they're closed, so we can't really take a look at their information. The Hang Seng, the Shanghai, also both closed last night. Only the Nikkei open. If we do take a look at the Nikkei, though, just down 37 points out there. I believe it was open last night. Let me see here. Yes, it most certainly was. April the 6th. No big deal. So no big, our market. So futures are down. It's the sell-off after the release of the jobs data, which comes out each the first week of every Friday, holiday permitting, or some type of storm or something like that. So the information was released on Friday. The futures market was not, as far as the index futures, not open for very long. I believe closing by 9:15, if I'm not mistaken. Of course, opening up again last night at 6 p.m. and basically opening right around where they had traded to on Friday out here. So we don't really have any worldwide markets to go take a look at. It's all going to be about us. It's all going to be about you and I. So that means we've got to go take a look at and see what types of things can we find out here about the markets. Let's go see what the sell-off has meant thus far. So let's start off by taking a look at the daily futures contracts out here, because there are levels that you and I can pay attention to. Inside the Dow and the NASDAQ futures, that's the level that you and I want to be watching the most. The reason why I say that, if you're watching us on TigerTV, I hope that you are. Of course, you can get the archive of this show on Channel 9. And we do stream live to basically every device out there that we can. And if you take a look at I believe this was Thursday, March 26th. Now, you can't, I think it was last Thursday, March 26th. Thus far in the Dow, that's the low that's out there. Now, that low, that candle session, by the way, was a hammer candle. Single strongest one-day candle, reversal candle that you can find in the Japanese candlestick Japanese candlesticks that are out there. An important message for both you and I. And that says the price low of 17,465. So for all of you that are short, don't get too giddy out here. What you need to see is a close below 17,465. Now, if you see that, if we were to see that, what's that mean? Let's go take a look at it. Let's look at both sides of the trade out here. If we take a look at our price projection ruler out here, our A to B equals CD pattern, we're going to see price does not necessarily have to get much below that level to complete a 1-to-1 area. In fact, because of where price is traded to, it's really more of a consolidation. There's really not much of an A to B equals CD pattern that's out here. So instead, we're really dealing with a consolidation. So let's not worry about our A to B equals CD tool. Instead, the tool that we would then really fall back to is retracements. And I would say, let's go take a look at the February 2nd low. That's going to be the low we key off of, and March 2nd as far as the high. So any close below 17,465 or any intraday session, which could be today, could be this morning, quite frankly, you'd have to look at 17,379 as your levels of potential support out there. So I'll move down below 17,465 intraday to 17,379. Absolutely not out of the question. And then closing back above the hammer candle, the bears will have failed out there. That's the only piece of information that we have right now. If we do see a close below 17,465, it says to me, okay, more likely than not, what you're going to go see is a test of the swing point. The swing point being the February 2nd level. So that would say anywhere between 16,880, 17,159, but more likely 17,233. That's the bearish side. The bullish side is that this hammer candle has not been able to have been taken out here. And that's really the bullish side. And all that we really have is a consolidation market that's been consolidating. Of course, it's been consolidating in essence for 3+ months now. We're already April 6th out here. If you take a look at, I did this before. Well, can I do it here? No, I can't really do it here. Just look at the cash index. I'll just switch over there for those of you that aren't familiar. If we just take a look at the Dow as an example, I'll just put up the quarterly time frame. This really paints the picture as far as what the market has been doing. And if we take a look at it, I need to get rid of that little arrow out there. We don't need that. Here's the quarter. So we're in the new quarter. And I mean January, February, and March out here. In the case of the Dow, it opened at 17,823. It closed at 17,776 out there. We've seen basically about, a 50-point movement or so inside the Dow. That's it since January 1st out here. So basically you've had no price movement whatsoever out here. And in essence, that means the market has been consolidated. Now, consolidated markets are the most difficult to trade. What you want to do is you want to try to identify a consolidation market as soon as you can. Then you need to move down to shorter term time frames in order to be able to go ahead and trade that consolidation. Or you can trade the bottom to the top out here. Well, let's go back and take a look at the futures market. Let's go back to the Dow. At this stage here, the consolidation pattern that we're dealing with is that hammer candle. If that fails, then I say more likely than not, we're likely to see the price move down into that 16,880-ish type range out there, which basically takes you back into, looks like October, certainly, but where it takes you back to is December 15th. 2014. That sets up your larger term consolidation. Now, that's on the Dow. Now, let's go switch over and take a look at the NASDAQ out here, because it's the NASDAQ that can most certainly go ahead and pull the markets to the downside. Well, if we take a look at the NASDAQ, it's trading right now at 4282.75. Its hammer candle, March 26 out there, so it's a key level for us to be watching, is 4270 out here. That's the key. In fact, you can clearly see the consolidation inside the NASDAQ. You can see the highs out here. You can see how price is not busted above that March 2nd level. Very, very clear. And we can see that since February 11th, this is, the price range between the 4270 to the 4474 level. And what that really says, if you take that price difference and either subtract it from the bottom or add it to the top, any breakout above or below the top or the bottom of the consolidation, that's likely the price point move that you're looking at. So 4474 to 4270, you're looking at a 200-point move. So any close below 4270, probably see 4070. 4070 is going to take you back to the top of that, looks like January 16th high. That high out there is actually, what is it? 41.31, so even above that. So that's the way that the markets are setting up at this stage. Nothing more than just a consolidation. Don't get too hung up in the fact that NASDAQ futures are off 24 points or the Dow is off of its. Now, what we also know about the market, so that's what's going on inside those two. Let's take a look at the ES Mini out here. Now, the ES Mini, the Russell 2000, doesn't give us those clear signals with regard to March 26. It looks like a hammer. Smells like a hammer when we take a look at the ES Mini, but a little too much at the top of that little wick out there. It's just a little bit too high. Nonetheless, price is still not below that, even if we use that. In this case here, we're just looking at the swing point from March 11th. That's what I would use as my gauge out here. Now, on this chart, we happen to have the TAS market profile low. Price has been able to bounce off of that. So in order for the ES Mini, the S&P futures to really get bearish, they've got to close below that March 11 swing point out there. That's 2030.50. Maybe the bulls don't like what I'm saying, nor do the bears like what I'm saying. But look, folks, this is what the market is doing. Nothing more than so far for 2015, than a consolidation out there. And that, in essence, is what we're seeing on the shorter term time frame. The consolidation will crack, will break. Where's it likely to crack or break? I think to the upside. I still believe to the upside. But at this stage here, the proof will be in the pudding, and the pudding hasn't been delivered. Maybe it's in the refrigerator getting chilled out there. Do you like pudding? You know, butterscotch pudding's not too shabby. Of course, I haven't had that in God knows how many years out there. If I take a look at the Russell 2000 on a daily chart out here, you know, really, there's just not much to go off of. You know, price has only gotten down to test the March 26th level. It tested it once. It tested it back here on April 1st and rejected it out there. Price moved higher. So you can see here, if we look for clues as to what the Russell 2000 is communicating to us, take a look at these out of the last 4 candle sessions, including today's, you've got these long lower wicks out here. Really, it's a message of the bulls being in control of the Russell 2000, not the bears. Yeah, futures gap down, because of dealing with the Friday's jobs data. But at this stage here, nothing's really fallen apart. So that takes a look at the 4 futures contracts, the indices for our markets out here. Maybe it gives you a little bit better perspective on what it means for the Dow to be off 118 points as we speak right now at 9:18 in the morning. Okay, so that's what's going on there. What are the other pieces of information that you and I can go take a look at? Let's go see what's going on in the currency world. I think we have to see what's going on in the soft and hard currency world. Well, let's start off with your friend and mine. It's the euro Japanese yen. Why is this such an important currency pair? Well, let's get it off the quarterly chart out. Let's go take a look at the daily time frame. It's so important. It's important because this tracks the U.S. stock market better than anything else out there. And at this stage here, this currency pair has not fallen apart. It did not fall apart on Friday. On Friday, the currency was trading out there. Our futures market only opened until 9:15, but as our futures were going lower, this currency pair was actually edging higher out there. That's usually, that movie they call them Bad News Bears out there. That's bad news for the bears in the marketplace out here. Yeah, the futures are lower, but the question is, have they found a bid? Have they found a bid? Hey, those hammer lows say that they have. Only time will tell. This is Steve Rhodes with TFNN. This currency pair, by the way, trading up at session highs as we speak right now. This is Steve Rhodes with TFNN. We'll be right back, folks.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures off 113, S&P down about 11. So we were taking a look at the currency pairs, just kind of going through one by one, looking for clues out there. We just left off with the euro-Japanese yen. That's trading to the upside, a little bit of a continuation. If I go back to that currency pair out here, now it too has really been consolidating. Been consolidating in essence since the March 10th time frame. So it's been working off an oversold condition out here. Right now, it's trying to take on the top of that consolidation. That top of the consolidation about 131.87. You're at 131.13 right now. So taking that out as that price probably moves up to about the 136-ish type level. But in any event, that's moving higher out there. That says there's plenty of liquidity inside of the markets out here. If we go take a look at the euro versus the U.S. dollar index out here, what we can see with regard to this currency pair, it's trading all the way back to its swing point, where it could take out the high. That high being the, let me do this here. It's a little bit too many lines on the chart out here. So let me see if I can remove them. A couple of them. Let me see. Come on, do this for me, would you? Let's see. There we go. Okay, so here's the A to B equals CD, potential to the upside inside of the euro. Now, this will go ahead and put weakness inside of the U.S. dollar index because 53 or 57%. I apologize for not having this etched in stone in my memory. I think it's more like the 57% of the U.S. dollar index is what the euro represents out here. So the euro, as we speak right now, it's trying to take out the swing point high from March 26th out there. Now, that swing point high is $1.10, 1.10. 0.052 is being the exact number. And if we see a move above that level, which I believe is more likely the outcome here, is that we'll see a move above that level, and then price will move up into the, I would say, not just the 1 to 1A to B equals CD, but more likely the 1 to 1.272 area. So that'll take you into the 114.72-ish type range, which is really back to the highs out here in February. I think that is the most likely most likely outcome for the euro with regard to the U.S. dollar index. Now, what is that going to do? That should put some weakness inside the U.S. dollar. Now, look, you've got the Japanese yen, so that also has an impact, as well as the Canadian dollar and the Great British pound. But the euro has such a large weighting, you can almost gauge the majority of what's going on inside the U.S. dollar index based on what happens inside of the euro. But let's not leave out the Japanese yen out here. What is it doing as we speak today? It's not doing much of anything. It's trading back into this swing point here for March 26. It's like March 26, March 26, March 26. Whether we take a look at currency pairs, whether we take a look at the U.S. stock indices with regard to swing points, but it is what it is. Now, it does look like the Japanese yen wants to actually move to higher price as well. So it's just testing the bottom. The real bottom would be 118.33. But if, in fact, it's getting ready to move higher, well, then it would be weakening. That would put a little bit of strength inside of the U.S. dollar index out there. If this continues lower, well, then it's just simply going to add to a pullback inside the U.S. dollar. That's what's going on with this currency pair. Now, let's go over to the hard currencies. We can come back and look at the Canadian dollar, the Great British pound out here. Not a lot of movement inside the Great British pound, so no reason to, well, a little bit of movement, but not a ton for us. Let's do this here. The Great British pound, let's just say it one more time. Great British pound gave a nice bottoming signal, and that was on the trade day of March 18th. Yes, that was when Janet Yellen, when the Fed was out there. But the reality is, big key reversal session out there. Price moved lower, did it with less relative weakness, bullish golfing, key reversal session, the whole 9 yards out there. So it has been suggesting that it's putting in a bottoming pattern. If, in fact, this continues to move higher out here, the Great British pound, the next stop on its move, we're just going to take a look at retracement levels from high to low out here. That says that you're looking at about $1.52 out here. Right now, you're trading at 149.6. So that could move higher. If that moves higher out there, that again puts some weakness inside of the U.S. dollar index. Now, let's go take a look at Goldilocks. And what do we have take place over the weekend? Well, you know it because we talked about it on Thursday. We've talked about it on last Wednesday. And of course, if we were open with you, if we were here with you on Friday, we would have talked about it then, and that was the full moon. And that full moon, I can't tell you why, I just know it does. And if you ignore it and you trade gold out here, you are doing yourself a huge disservice. And that disservice is just simply that the full moon tends to act as, when I say tends, I'm talking about not 10%. I'm talking like 80, 90% of the time, it acts as a initiation point. Why? I do not know. I just know that it does. And what we've got gold doing right now is trading above 1219.50. That happens to be the swing point out here. That's a swing point from what other day than March 26th out here. And he closed above 12.19. You gapped up. Now, the gap up doesn't mean as much to me necessarily because gold was closed on Friday. So we don't, so that gap I'm not really paying attention to. You're up above the swing point. Up above the swing point so high that gold is on its way to 12.56 and 12.77. Most likely the 13.04 level. This is Steve Rhodes with TFNN. Right.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow off 87 points straight at 17,674. S&P down 7.5 at 2,059. Composite off 24 points at 48.62. Russell 2000 off 5.5 points at 12.49. Gold is up 19. Silver's up 42 cents. Let's go take a look at the silver out here. Let's go see how it is dealing with its March 26th swing point out here. It has not made it all the way up to the top. Gold really catching up out here. March 26th, swing point high is $17.40. I suspect that it'll go ahead and be able to take that out and then move all the way back to the $18.58. In fact, quite frankly, if it follows along with gold, it'll make an expansion of its swing points out here. I would say that it'll set up a butterfly pattern. Butterfly pattern says that what you'd really see most likely is silver moving up to about 19.42. Right now it's trading at $17.12. Still not above its swing point from March 26th. But it likely will go ahead and follow along with Goldilocks out there. Quick peek at light sweet crude right now. That's up $1.10. That's trading out at $50.24. Let me pull this back here. It's very possible. Let me get rid of the retracements out here. Let's get rid of that. Very possible that light sweet crude is also going ahead and making an A to B equals CD pattern to the upside. That would then give you a price objective here inside of black gold, Texas T. That would give you a 1-to-1 A to B equals CD price projection of $55.50 out here. Now it's trading inside the swing point from March 26. It does say that it should test that high of 52.48. What light sweet crude on its most recent pullback did was nothing more than test the top of its March 18th swing point and reject that level. So 52.48 should be about a given inside of the liquidy product out there. Maybe head up to 55.50. In fact, if it can take out that 52.48 area. Now, let's go. So we took a look at the currency pair. We took a look at the hard currency pairs. Well, we didn't take a look at natural gas. Back 6 pennies as we speak right now. Now, if I'm not mistaken, I've got to try to open this up here. Natural gas is scheduled to make a bottom here. Let me see. Where the heck is that? Oh, it's right here. Okay. There's my tab. It'll take me a moment to do this. I should have had that open, but I closed everything down over the weekend. Recent. I think it's on this one here. Give me a moment here. Light sweet crude. Okay, yeah. So here's light sweet crude. Let's go put this on the screen. There's plenty that like to trade this. Let's take a look at this from this current slide. Okay, so here's light sweet crude. Here's your seasonal pattern inside light sweet crude. Now it's scheduled. I know I'm looking someplace else. April 9th. What's today? Today's April 6th. How about that? So it's scheduled to form a bottom on average over the course of the last 11 years. Right here where my little cursor is at. That equates to April 9th. Now I did not. On this chart here, I did not pull things back to represent the 2015 calendar. So I don't know if April 9th is like April 6th, 7th, 8th. Let's just say we're now in that time period here where natural gas, from a seasonal perspective, typically forms a low out here. Okay, so we know that. We're in the week when it does that. That's all we really need to know. We kind of use that more as a guideline than anything else. So if we take a look at the current natural gas contract out here, trading a bit lower this morning, made a nice big old bullish engulfing candle on April 2nd out here. So the low, it's traded inside the swing point from the trading session of April 1st. So you got a couple different patterns to take a look at out here. There's really a couple of different A to B equals C depends. Let's look at the first one, though. Let's take a look at the first one. The first one starts with the high back here on January 15th. So let's start with that. Let's go see if that pattern here completed. That's your A point. Your B point would be down here on February 5th. And your C point is the retracement up into February 23rd. So 1-to-1. No, that has not been hit. That gives you a price objective of $2.49. So if, in fact, natural gas this week is able to take out the lows from April 1st, $2.58 out here. This is the K contract. I believe this is the current contract. This is May out here. Yeah, it's certainly the current contract. I can see just by looking at the volume out here that, that gives you a price objective of about $2.49 out here. But it's going to take out that low from April Fool's Day, from April 1st out here. So that would be the price point. That's the larger A to B equals C pattern. That's the one that I would be taking a look at as a potential. If you're looking, if you're seasonally speaking, this week we should see some type of low inside of natural gas. So for those that actually want to go ahead and trade it, that's what you'd be looking at. I would also say that the message of the markets here is that on the trading session of April 2nd out there, you've got a nice big old bullish engulfing candle. So as long as natural gas closes today below 267, and you're trading at 265 right now, probably says it's going to go test $2.58 out there. That may be the point at which you want to start going ahead and building positions. So that's what's going on inside of that contract. Okay, so we've taken care of commodities. We've taken care of currencies. Not much to look at around the world. We've looked at the hard currencies out here, gold and silver. Obviously, I said commodities, so I said it twice. Now let's go take a look at, see what's going on inside some of the individual stocks and so forth. Let's go take a look at what's leading the charge to the downside out here. You've got M&T Bank. MTB is the ticker symbol. If we take a look at MTB, that's off about $5.80, off 4.5% out here. The news behind it, what do they announce? Will not be positioned to prove its merger with Hudson City Bancorp. Okay, so they've got no approval on a merger deal out here, and so you've got this equity selling off. What is it doing? Let's go take a look at this, see if there's some kind of volume bars that it's dealing with. It's just below a swing point, so it looks like it's actually set up an A to B equals CD down, a little Gartley buy pattern. Your A point on here is this little shooting star candle that was on March 23rd. So traders knew something was going on out there. That's their role, is to provide you you and I with candle signals. So the 1-to-1 on this takes you to 120.37. I suspect that because the B point is being taken out with volume, or looks like it is, that's 689,000 shares on March 26th out here. You've already done about 267,000 shares. I would say that more likely than not, your Gartley buy pattern on this potentially would be down at the 0.618 area, around 118.58. That's your 1-to-1.272. A to B equals CD. Ticker symbol there is MTB. Of course, you want to take a look at volumes as price moves down to that level. If we take a look at what else is moving, you've got Receptos out there, RCPT. That's off $7 and change. I do not see any kind of news behind it. Let's go take a look at this equity. Now, Receptos, RCPT, has a high volume high, an all-time high out here, and that's at the price level of 203.25. Pullback so far this morning is on light volume compared to that high, which was made with 3.2 million shares. Receptos ought to be up at some point in time to test out the 203.25 level out there. Let's see, what else do we have moving to the downside? We've got the Baidu. BIDU is the ticker symbol. That's off about with 400,000 shares, down $4 and change. That is testing its market profile low, and its swing point out here. Its swing point, which almost formed a island bottom. Looks like maybe it did. Let's see, the high 206.97, the low, yeah, it did. It formed a little island bottom pattern out here. That's the February 12th level. So in the case of Baidu, only if it closes below 199.70 does it really have any real problems out here. Let's pull this back just a bit, see what it's been doing out here. You know, been trading lower. It's got a nice little descending price channel out here. So let's go take a look at the price channel inside of this equity, see what it's doing. It's got a very clear top end of the price channel. So you know when Baidu, if Baidu is ever able to break above that level, in fact, I'd have to say it's a fairly clear top and bottom. Let's move this up like this. So here, as we take a look at Baidu, you know, could easily come down and, well, it's pulling into the swing point, this high volume swing point, which formed that island bottom. That was from February 12th. That had 14 million shares there. Today, you've done 434,000 shares. As long as price trades inside that, that says it can go test the low, 199.70, which would also be towards the bottom of its price channel. In the case of Baidu, until it breaks above this rising price channel out here, it's in a decided downtrend. I mean, seems like that's kind of like a foregone conclusion out here, but that's what it's doing. Now, if I take a look at the ES Mini, it's up above a very important level out there that says do not be short. Of course, I'm looking at shorter term time frames out here, but hey, plenty of information. As I said, the world markets didn't really give us any clues out there as to what was going on, but of course, you and I know we have a secret. We have a secret clue out here, and that's called that Euro-Japanese yen, and to ignore that, well, it's like ignoring a full moon when you trade gold and well, when you trade gold and commodities out there. Looks like there's a question says, can I check out ticker symbol FHLC? So I can do that. Let's come back here. Let's go take a look at it. It is FHLC is the ticker symbol. This is Fidelity MSCI Healthcare Index out here. Now, the problem with this is I don't know what the weighting is inside it, what it's got holdings, and you really need to know that when you trade any of the ETFs for the most part. This has just simply been consolidating since the February 20th. Well, I say it's consolidating. We really haven't tested the top of a consolidation level. You know, it's still in a uptrend, hasn't been able to take out a swing point from what day? March 26th. So much like the market out here, this equity, if it takes out March 26, let's take a look at volume. As that level was tested, that swing point at 420,000 shares was tested with 283. So it doesn't have enough to bust it down. If you can't bust it down, it says, hey, wants to go ahead and try to bust it to the upside. So until FHLC takes out March 26, does it with volume, you don't have an A to B equals C to the downside. You have, you know, I guess the beginning of a consolidation inside of this healthcare index out here. If it does take that level out, then you've got an A to B equals CD to the downside. But until that stage, it's not been able to bust out the lows. That was ticker symbol FHLC. Now let's go take a look at some things here that are moving to the upside. Let's go take a look at Cure, spelled with a Q. QURE is the ticker symbol. That is Unicure. What are the Unicure is what? Just trying to see what is moving this out here. Looks like some type of collaboration revenue, but let's just go take. I don't see anything. Looks like maybe they're announcing Bristol Myers Squibb and Unicure. Okay, so Bristol Myers Squibb and Unicure have entered into some type of exclusive agreement out here, and we're seeing this thing really motor on up with big volume to the upside out here. So where's this thing headed to? Let's go take a look at a weekly chart out here. This is at its all-time highs. Let's go see what kind of A to B equals. So, man, this thing has not been traded for that long. It takes you back to a year ago, February in 2014. So it's got its first A to B equals C to the upside on the weekly basis out here. So that says that your A point down here around the September area, September 2014, your B point out here on March the 16th, your C point just last week out here, the low of last week. That says that this equity very likely headed to, well, let's call it 46.68. Should blow past 41.51. It's A to B equals CD to the upside. Ticker symbol there is QURE. So now we got the markets. They've turned positive out here. The only thing that hasn't is the Dow. So you've got the Russell, the composite, the S&P is really just flatlined itself as we speak right now. We'll see if it can hold these levels. Let's take a look at some additional stocks. And during the last 2 minutes, when we come back from our break, we'll go take a look at the summation index and the VIX index, try to get a feel for its message out there. Let's take a look at that Tesla. That's our leader, second in the clubhouse out here, up about 5%, up $9 and change. I don't see any news behind this. This is a weekly chart. Let's go switch down to the daily time frame out here. Inside of Tesla, it's back to its swing point from just a few days ago, last week, or 2 weeks ago, March 24th out here. That swing's got 3.6 million shares. Up into that area with 1.7 million shares. So moving into a swing point with volume out here. If I look for trend lines inside of Tesla, that seems like that's pretty easy to do. The trend line says that that's probably where Tesla's going to try to take on that trend line is what it looks like. That trend line taking it back to its high from September 4th. Your next touch point out here, and this is just looking at the high of the candle. The next touch point is the November 18th. Level out there. So it says that price is likely to run into that area. It's got its TAS market profile that began a couple of trading sessions ago. Top of that box is at 201.55. The high so far, 200.67. So if Tesla can break that trend, then this A to B equals CD to the downside pattern that is out here says we will have a change in trend. And Tesla says that the next move would take you up to the price point of 225.65 out there. That would be, of course, nothing more than a dead cat bounce out there, and that's what's going on in ticker symbol TSLA. Also to the upside, let's look at Delphi Automotive out here. DLPH is the ticker symbol. That's up 3%. It's up about $2.50. It's taking out a swing point. Looks like it may be doing it with volume. It's a daily chart. It's got 1.2 million shares. Yeah, you've been trading for 19 minutes. You've done nearly 400,000 shares. So in the case of Delphi, we'll just look at the smaller A to B equals CD pattern to the upside out of your A point. The January 16th low. Your B point out here is the high that is being taken out today, and that's from March the 4th, and then it's got a swing point from none other than March 26th out here. That says that Delphi Automotive very likely headed to 92.37 right now, trading out at the 83.71 mark. We've got the Dow up 9, S&P up 2, Composite up 9, Russell 2000 up 3.57. Glad to have given that information on the euro, Japanese yen, those hammer candles out there, because they all mean something, folks. This is Steve Rhodes with TFNN. Hope you're back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain obtain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow is flat. S&P is up. It was flat. The composite's up 3 points. Russell's up $2.50 out there. So had a request to go take a look at a 30-minute chart here for the NASDAQ composite. We'll take a look at something here in the next 2 minutes here for both bulls and bears out here. So here's the 30-minute chart. That way that'll just kind of be a nice smooth move into take a look at the summation index. Here's the 30-minute chart here for the NASDAQ composite. We can see a very clear descending price channel. In fact, price here right now is right up above. You can see the body of the current candle, which ends in about 6 minutes. It's run right into resistance of the top of the descending price channel. So if I'm going to find something for the bears out there, it is that price inside the 30-minute chart here for the NASDAQ composite right up against resistance. If this level gets taken out, you were trading the markets off of a 30-minute chart out here, would say you're seeing a change in trend take place. If you don't see that get taken out, then it says just stay put out here. So that's the message of the 30-minute chart. That's the quick message of the 30-minute chart. Now let's go take a look at the daily chart, and let's go over and take a look at the NASDAQ composite. What do we know as we speak right now? We know that the price oscillator is up above zero. That says if it is above zero, it says that the buyers have control of the market, not the sellers. Now, this chart here, we take a look at the price oscillator. It's really how do things end up at the end of the day? But you know, you had futures sell-off. We had the bad news of the lack of jobs that were created out there. Of course, the reality is both you and I know that the data that they provide on Jobs Friday, you know, they release that data 12 times a year out there. If you had an employee that released data like that, you'd fire him. You'd fire him because the reality is the numbers are never accurate. There's always revisions to them out here. You know, that's with using all the best tools out there. So if you're going to give me numbers that are going to get revised, why give me numbers anyways? If you're going to give me numbers that move the markets, then why do that anyways? Here's what you and I can rely upon. The price oscillator gets above the zero. It says you've seen the change in trend inside of the composite. New York Stock Exchange has never given up. It's been in bullish mode out here for several days. That hammer candle back last week on Wednesday, I believe it is. Bullish engulfing on Thursday. Continued move higher today. The bulls are running the tables, folks. Hey, stay tuned. The second hour of the Trader's Edge will be up in about 10 minutes. We'll get a market update from Tom here. Take care, folks. Have a great Monday.